Hello, this episode of the Weekend Chart Prep is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Leroy Sr. and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tools that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. What's going on? Y'all come on in here. We're gonna go ahead and do us a quick weekend chart prep. Hopefully y'all been having a good weekend thus far. Having a good excuse me while I make sure I got my stuff together over here. Excuse me. While I make sure I got my stuff together over here. All right, let's go on in here. Get straight to the charts, man. I ain't gonna hold y'all up today. I was sitting here after me and my son came from worship service. I was about to do my weekend chart prep, and I was like, hey, man, let me go ahead and let me do a pop-up weekend chart prep with the people, man. Shout out to everybody that pulled up to the first Q&A session for the Smart Money Manuscript. As you saw in the beginning, if you had the opportunity to see in the beginning, this episode of the Weekend Chart Prep is being brought to you by the Smart Money Manuscript. Shout out to everybody who was on the first Q&A session. All right. Shout out to everybody who was on the first Q&A session. If you are, if you've taken advantage of the Smart Money Manuscript, that Q&A session, if you come to the SMM Live channel, that session will be available to rewatch until but the last day to watch. Tomorrow it won't be there. It'll be the Q&A sessions will be available to rewatch for the weekend, and after the weekend, then they won't be there anymore. The Q&A sessions are an added benefit to the Smart Money Manuscript. It's the added benefit of mentorship, giving the added benefit of mentorship for those that purchase the course. All right. I'm a firm believer in if you are sharing knowledge with somebody, you know, I believe there's a certain level of mentorship that is required to get the full advantage of what the person is learning. All right. So if you come into the SMM live channel, right, I don't know how it looks on your device you're watching it on, but when you come in, you have the monthly Q&A channel, right? And then that's the monthly Q&A schedule channel, right? You have the bat signal. That's like the chat channel. Then you have the actual course, the Smart Money Manuscript. And then you have SMM Live. When you go into SMM Live, you will see the past recording inside that channel. Right, you'll see the past recording inside that channel. So that's where it is. That's where it's located. This is also where we do the live streams. If you come for the monthly Q&As, is every first Saturday of the month at 11 a.m. Right, we had our first one. No, every second Saturday. I'm sorry. So every second Saturday of the month at 11 a.m. is when we have our monthly Q&A sessions. So let me go ahead and so October the 11th will be our next one. All right. October 11th will be our next one. All right. Go ahead and make this now. 10, 11th. That's it. Make sure that's right. Yes, October 11th. Nope. I'm on the phone. Monthly. All right. Okay. So now we got our second live stream scheduled. Y'all, hold on one second. I'm on live. Now. It's too late, baby. No, I got stuff. I got to take my son to the movie later on. I ain't know what time you're doing that. So now I'm on live. You are past your wonder, baby. You love y'all. All right. All right. Call me later. I love you. Hey, Auntie. Love you, Auntie. Hey, Auntie. Love you, Auntie. And hey, Erica Sealing. Love you, Erica Sealing. All right. Yeah. All right. I'm back, y'all. Sorry about that. My mama call us every day at like 1 o'clock. And so today she hey, look here, Yolanda. You ain't gonna be bothering me with 12 different logins now. Coming, you gonna pick which device you want to be on. She texted us the day talking some. I'm gonna call y'all when we get finished with practice. I'm like, look, I'm sick of it. I got stuff to do later. But anyway, that's where the recordings are. Shout out to everybody who pulled up on the Q&A. Now look here, man. I'm gonna tell you, I wish I had my green screen up so I can turn my camera on and look y'all in y'all faces when I say this. I'm not gonna be in there pulling teeth if he asks people they got questions. Don't pull up if you ain't got no question. You put everybody pulling up to look at Lou and Rubberneck to see what the next person gonna ask. I'm sitting there 15 minutes, people coming in. I'm like, okay, you got a question? Everybody on mute, acting like they can't talk, acting like they can't hear nothing. I'm thinking something going wrong with the system. And then finally somebody asked the question. we pulling up with no questions. Next time it's gonna be real fast. I'm gonna pull up. I'm gonna be there for 2.5 minutes. After the third time I say ain't nobody got no questions, in the live. What's going on, Valentine? Let's get to it, man. Weekend chart prep. Y'all ain't came here to listen to me rant and rave. Y'all ain't came in here listening to me rant and rave. Y'all came in here to hear me. And I always have a question waiting for you. Good, Steve. Good. Steve, the only one that had a question. Steve, the only one that pulled up with a question. And Steve question was a beautiful question. We got a chance to take a deep dive into stuff that we've been talking about right now to this day, even on the NQ. Time and price. We got opportunity to talk about time and price. I appreciate Steve for pulling up with the hard-hitting question, since everybody else want to sit there and look at each other, looking at me, looking at them. It is September, starting the third week of September this evening. This evening is going with the futures. That is, this evening at 6, we're going to kick off the third week of September. Right? Next week on Sunday, you can look at your neighbor and say, do you remember the 21st of September? Is it the 21st? Do he say the 21st in that song? Is it the 21st that he said in that song? Let's look up the lyrics. Let's look up the lyrics. Y'all know how I do, man. Y'all know how I do when I get off on a tangent. There it is. Do you remember the 21st? Oh, it's the 21st night of September. I just said the 21st of September. Do you remember the 21st night of September? Pretenders chasing the clouds. Our hearts was ringing in the key that our souls were singing. That song came out in 78. It's crazy. I remember the lyrics to this song. How can I remember the lyrics to this song? You know that my parents had to sing this a lot. Well, had to play this a lot for me to remember these lyrics. Because I haven't listened to Earth, Wind, and Fire in 30 years. Easy. And I remember the lyrics to this song. So next Sunday, you can say, do you remember the 21st night of September? I was looking at a comedian today. This man had me cracking up. I just thought about it because I said, do you remember? He was talking about toxic men. he said, man, I'm exactly who my daddy raised me to be. And now everybody want me to believe that that's toxic. He said, I'm exactly what my daddy taught me to be. And then he was like, it did. And then he was like, it did. Y'all women love that toxicity until it ain't good for you. Soon as it ain't good for you, now you don't like the toxicity. But long as it's good for you, you love that toxicity. Then he started talking about all the all the famous people that's toxic. And then he said, you know who the most toxic person of them all is? Michael Jackson. Michael Jackson was the most toxic person. You said Michael Jackson. Michael Jackson out there stalking his side piece. Talk about the blood stains on the carpet. Then he got nerve to go creep up and stick his head in here one and say, Annie, are you okay? Oh, Annie, are you okay? He witnessed the murder and he ain't say nothing. He's sticking his head in the window. Annie, are you okay? Oh, Annie, are you okay? And then I want to say the most toxic video he ever made. He was messing around with a chick, and he messed around with a chick, and she got fed up with him, and she done went off and married a king in Africa somewhere, and they invited people to their wedding to entertain them, and then here come Michael Jackson homeboy come in and drop all this dirt on these people fancy flow, just pour all this dirt on these people fancy flow, and the king looking, Magic Johnson don't even know what to call him, and the king looking like, man, what this joker doing pouring this dirt on my flow, right? And he walk off, just pour the dirt and walk off, and then Michael Jackson gonna spin his toxic behind up out of that dirt and talk about something. Do you remember how we fell in love? Oh man. Oh man. I kill me. Man, let's get to that. Let's get to the price section, man. Let's get to the price section. Hey, it's a new, not ain't a new month. We looking at the third month of the year, right? We're looking at the third week of the month. Lord have mercy. We're looking at the third week of the month, and we have taken out the high that we were watching, right? Watching that high there, and see if we was gonna leave that high in place, anticipating going into a bearish time frame, right? Seasonality. The August month was right in line with the historical data, right? Right in line with the historical data. Based off the seasonality over the last 5 years, I think it was it 60% up. I don't feel like opening it up this time to see. I guess we can. We don't want to ever think about anything. We want to always go off with what the data says. Stockcharts.com, seasonality, right? We're on our seasonality chart. Right. So we looked at the Qs, and in September, right? We had a fort over the last 5 years. Oh, I learned this. Well, I learned this right here. Hey, Kim, come on in, Kim. Oh, where did Kim go? Oh, come on in, Kim. Right. I learned this weekend with stockcharts.com, right? Because I always go and look at the 5 year. But if you grab this little thing right here, this little sliding bar right there, if you grab the edge of it where those little 3 lines are, you could stretch it out for, if it let me stretch. Why can't I? Maybe I got to turn off this highlight thing. Maybe I got to turn off my highlight thing because my highlight thing be messing up my cursors. Yeah. When it be highlighted, don't be, you can stretch out the time, right? How much time you want to look at. So if you go back 20 years, right? If you go back 20 years on the Qs, right? August had a 65% chance of closing higher than it opened, and a on average over 20 years, a 1% gain on average. And then we saw that over the last 4 years, we were still in line with that, counting this year, right? So we ended the month higher than we opened, and it was a um 0.5% gain on the Nasdaq. That this is for the Qs, but the Nasdaq is um pretty much the same. No, where are we? I'm on the wrong month. No, I'm on the right month. From July to August. Yes, that's right. I'm on the right one. Right. So we got a 0.5% gain. Right. So we pretty much falling in line with the average, right, based off of 20 years. And we also fell in line with the average based off the recent times, right? Because you look at, I just found out you can adjust this. Right. If we look at 10 years back, right, 40% higher than normal, the average of almost 2% down, right? And then 5 years back, right, 40% on average with almost with I looked at the wrong month last time. 70% with 1.8% up. I looked at the wrong, ain't right. So 70% close positive, average 1.8, almost 2% up, right? Then over the last 5 years, 60% close on a chance to close positive and basically flat, right? So over the short term, basically flat. And so when you look at all of the data, right, from the 20-year, 10-year, and 5-year, you see that we fell within the average because we closed positive, and it was like a 0.5% on the NQ. Now, this is for the Qs. The Qs are for the NASDAQ, but the NQ futures moves, you know what I'm saying, in tandem with the NASDAQ. The only difference is the NQ futures trades 23 hours a day instead of just the New York session. Okay. Now, September, right? Looking at the same data, okay, over 20 years, it's a 50% chance that it closes positive, and it's relatively flat, like a 0.5% down in September. Then we look at 10 years back, it's a 40% chance that it closed positive. It's almost 2% down. Then over the last 5 years, it's a 40% chance of closing positive, and a little over 3 years down. So in the more recent history, September has been more bearish than the overall history. So it's been having a trend of being bearish in more recent history, right? And then looking at more recent history, if we go back 2021, it was down almost 6%, right? In 2022, it was down over 10%. In 2023, it was down 5%. In 2024, it was up almost 3%. So 3 out of the last 4 years, it's been down, and last year it was up almost 3%, right? So looking at, the short-term history, the trend has been to the downside for the NASDAQ, right? 2016, the last 10 years back, 2016, it was up 2%. 2017, pretty much flat. 2018, pretty much flat. 2019, pretty much flat. 2020, down. That from 2020 on, we know the stats from 21, 22. So from 2020 up until 2023, we know it was down. In 2024, it was up, right? So in the short term, you also got to think about, you know what I'm saying, that crazy COVID time frame was in there too, with 2021, and summer 2022. But in the short term, it's been typically down. right? Overall, long term is typically down, but mostly, not really being a huge down, right? Not really being a huge down, right? Pretty much flat to the downside. Okay, for the overall history. Short term, down by a lot. Overall time frame, pretty much flat. Okay. Now, um, with that being said, right, we open up the month, right? We see here in August when we came up and took out that buy side, and we was looking to see if this drop back down after taking out that buy side was going to start the bearish seasonality, right? We see that we drop down, right? Because August we took out the buy side, came down, made a low, and then closed here, right? In September we dropped down, but we respected consequent encroachment of this lower wick, right? Then we went up and took out the high. So we're looking at that right there as an immediate rebalance because we closed July with opportunity to create a BISI, right? After creating this BISI here. So now we close with the opportunity to create a BISI, but we came down, traded into that June candle in the month of August, right? Creating a possible immediate rebalance, came back up and closed the month here. Then we open up September, right? And we've respected consequent encroachment of that wick, and we've taken out the high, right? So that immediate rebalance has played out. Boom, right? We've played out the immediate rebalance there on the monthly time frame. All right. We have been saying before that the higher time frame was in a buy program after making all-time highs back here at the end of June, right? We had just been in this range right here, right? We haven't broken outside of that range, and we still haven't broken outside of that range. We're still up here, right? Engineering liquidity. We still haven't broken outside of that range right there. Okay. Um, right here. This is August when we came down, right? Remember when we dropped down there. If we go back to the monthly chart, if we go back to the monthly chart right there, right? Look here. When we started out in August, we came down, right? Then we went up, took out that high, then rejected off of it. All right. Now let's go back to the weekly chart. There. Okay. We start August started in this week right here, right? Because the beginning of August, like the first or second, if we look back on our calendar, the 1st of August was on a Friday. And so it would have been the week of the 28th of July, right? We got it 28th of July. This is when August started. So we was coming down, right? When we started August, then we went up, took out the buy side liquidity. Then we came down and closed the month right here, right? So we had a bullish Judas swing there, down, up, right? Retrace back down, stop there. Okay. So we had a bullish Judas swing, right? And then when we started out September, right? Started out September, we dropped down, right? Traded below that low there, right? Of that the week of August 18th. Did we take that low out? I think we did. I think we looked at that. We poked below it because we was in a short-term sale program, and we were seeing if this short-term sale program was going to extend. But we were saying if we didn't trade down below a certain point, we still didn't get that breaking structure on the higher time frame to invalidate the buy program. Okay. And then we open up September over here. Like I said, we dropped down, took out the sell side, respect consequent encroachment of that discount wick, right? And then we slowly
finally make our way up last week. And when we opened up this week here, we said we was going up first. So this was going to be either a extremely bullish week, or it was going to be a we're going up to get a bearish Judas swing to have a bearish week, and we ended up having an extremely bullish week. On the lower time frame, we looked at how this played out in the aspect of a market maker buy model, where we had come down into a discount. Then over here, this week was pretty much just a low resistance liquidity run in the when in the concept of the original silver bullet of taking a long entry based off of the um final stage of reaccumulation, right? And we'll look at that again once we get into the lower time frames. All right, so uh on the weekly time frame, we'll go ahead and mark it our weekly high, now our weekly low. Don't need to have that showing there. Don't need to have any gap showing right now. Yeah, don't need any gap showing right now. All right, nothing else that I want to identify on the weekly time frame. Um, we're treetop tall in the buy program, right? We're above buy side liquidity, right? We've opened up the month, and over the first 2 weeks of the month, we've traded straight up, right? We've traded into the buy side liquidity, right? So we're in a premium on the overall range. We're in a premium on the weekly range. And looking at how we closed off of that high right there, I'm willing to gamble that we're in a premium on the daily range too. All right. Going down to the daily time frame. And yes, we are. Okay. Looking at our daily chart there. Um, adjust this. Okay. Right. So this is Friday's price action. And again, we're up there in a premium on the daily time frame too. Because we look at our daily range, the lowest low and the highest high from last the previous day daily candle. We closed right here, close to the high of the day. So we're in a premium on the daily time frame, right? If we run a fib tool on the daily range, right, you can see that we close well above equilibrium. If you run a field two on the weekly range, you see we close well above equilibrium, right? And then you already know this was the highest high in the overall range. So we're up there in a premium on that range too. So we're still up there treetop tall. All right. Still there treetop tall. And I know some of you may be like, well, Tim, for the last bunch of weeks, you've just been talking about, hey, we're in a premium. We don't buy in premiums, but the market just keeps going up. Look, if you didn't participate when it was in a discount, right? You don't want to be that one that smart money sells to up here, right? Because ain't no guarantee that it's going to keep going up. The risk to reward is not skewed in your favor when we're up here in these premium prices, right? The risk to reward is not skewed in your favor up in these premium prices. So you don't want to be the one that smart money sells to, because when they decide to pull the rug and you bought up here at all time highs, then you're going to have water in your eyes when it starts to drop on you. The stock market is the only place that I know where people just don't want to wait for a sale. Don't nobody want to wait for a sale. Don't nobody want to start buying until the prices start going up. Stock market, the only place that I know that exists. Everywhere else, people want to sell. They go in there trying to get a discount at everything. I'm a veteran. You got veterans discounts? It's Memorial Day and I'm a veteran. Can I get a free meal? Everybody want some kind of discount. I'm over 65. Can I get a discount on my coffee at McDonald's? But in the stock market, people don't want to buy until it's treetop tall. All right. So on Tuesday, we traded up and closed above this August 12th Bissy. Okay. It's August 12th Bissy. That right there This right here was the first BISI, right? That was created when we got this displacement down and took out this sell side liquidity right there. So when we closed here on September the 9th, closed above this. Right now, we're looking for this to act as an inversion fair value gap, right? We look for that to act as an inversion fair value gap. Then we close, right? We open up the next day, trade up, make relative equal highs, and we come back down, trade through the low of it, but then we close respecting consequent encroachment of it, right? Right there. So we're respecting the high probability inversion fair value gap. What, Tim? Why do you call it a high probability inversion fair value gap? Go back and look at the old live streams. We talked about it. We've been talking about it for a very long time now. We've been saying it over and 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 over. If you don't want to look through mine, go look at ICT 2023 mentorship. I can't remember which video it is, but yeah, it's in one of them videos when he talk about it too. Then once we respect consequent encroachment of it, right, we open up, respect consequent encroachment again when we open, and then we expand up, right, make relative equal highs again. The NQ was playing with us. It came up here very close to that high. Don't want to take it. ES already took it. Dow heading toward it, right? We came up again, blasting off, playing with us again. Didn't even take out this high, right? And then we got a nice little gap up, trade back down, away from the high, still playing with us, right? Acting like it don't want to take it, right? And then it just have a nice slow march all the way up into the high. They close the day off of the high, right? So now the inversion fair value gap here has done its job, taking us into the buy side liquidity. All right. So we have reached Picasso's house, right? We have reached Picasso's house. Now, what do we let's go back for a minute. Right. Let's go back for a minute. And I want us to look at things that we say and look at the aspect of it doesn't have to happen as soon as you want it to happen. Right. And you have to understand that manipulation plays a factor in this, right? Manipulation plays a factor in this. But when you really sit back and look at the motion of the price action, you can really see that the algorithm is still being the algorithm within all of this manipulation, right? So when we come down here, right, remember we said this was the first BISI that was created when we came down and took out that sell side liquidity right there. Okay. We talked about this. We said this right here is what I called a short-term change in the state of delivery, because this was based off of the lower time frame. I know you may be looking at this saying, Tim, this is a daily chart. Why are you calling this a lower time frame? Because in the sense of where are we right here at this time? We're at all-time high territory, right? When we start falling here, we're at all-time highs. So what does that mean? There is nothing higher. We're on the yearly chart. There's nothing higher. So in comparison to a year, a day is a lower time frame, right? There's 365 daily candles. Well, not 365, but you know what I'm saying? However many daily candles end up in a year, right? That's how many daily candles are there for a year. So it's a small time frame. You get what I'm saying, right? So we're at a higher time frame. So this lower time frame change in the state delivery, we can't put a whole lot of weight on it, because until we come down here, right, we're not getting the change in the state of delivery on the true move. Right, Tim, what do you mean? When did the elephant step in the pool? Here, price expanded down with some authority, right? Here we was we were moving up, and then right here, boom, we got this huge drop down and then a huge rally up, right? This is the move there. Until we trade back down there, we don't have that change in the state of delivery that says, okay, I'm bearish now, right? And we pointed this out over and over and over. We don't have it there, so we don't want to try to pick a top, right? Only thing we can do is trade the short-term sell side and trade the buy side if it offers it to us. Okay, so we come down here, and what do we do here? We reject this low. So if we reject that low, right, our reasonable target would be here. Why is that? Because this high sent us down to that low, and then we rejected that low. So if we reject that low, the reasonable draw on liquidity would be that high. Okay, so for the overall dealing range, this high was the target all the time. Why? Because we're in a buy program on the higher time frame, and we don't shift our draw on liquidity for the higher time frame until it's invalidated. Okay, and when would it be invalidated? When we come down here, get that change in the state of delivery, that break in market structure. Okay, now if that's our reasonable target, right, what do we have in the place to stop us from getting there? Right, we got a SIBI that's designed to keep us down. Right, we got this bearish fair value gap that we created when we got this change in the state delivery. Right, so when we come back to this lower time frame bearish order block, what do? We react off of it. We come up here like midway. Okay, we react off of it here at our high probability inversion fair value gap. Right, once we react off of it, we come back down and we take out sell side, but we reject that sell side right there. Okay, so once we reject this sell side after tapping it, right, what is our reasonable target? Okay, what is our reasonable target when we reject it? Somebody tell me. Who over there now? Kim, Yolanda, one of y'all tell me what's our reasonable target, right? Now, when we rejected this low here, we said this was our reasonable target there, right? We come back up, we come into our bearish order block and our high probability inversion fair value gap, right? And then we come back down, take out that low, and then we reject that low there. So now what's our reasonable target after rejecting that low?
That high that sent us down there. The last bullish candle right there.
This one here.
Right. That's our reasonable target.
And you get partial credit for that. You're very correct. That's
and
your
back into the and back into that. Yeah.
That right there would be your
that one back into that inversion gap to test it again. Yeah.
Yeah. This right here would be your low hanging fruit. That would be your low hanging fruit, but that will still be your target because we never reached it. Right. This was our draw on liquidity. Right. When we rejected this low, we came up, did not reach it. We ran into some PD arrays that we expect them to do their job. Because what did we say coming up? We said, what's supposed to stop us from getting here? So we're anticipating these to do their job, right? Once we came up there and they did their job and sent us back down, right? We rejected that low. So since we rejected that low, that's still the algorithm saying, yeah, I'm not ready to come down just yet. So as we come back up, right? That's our low hanging fruit, but we still got our eyes here because we never delivered to it from over there, right? And we're still in a buy program, right? So this would be a spot where there's nothing wrong with taking your full position off right there. Why? Because that's your low hanging fruit, because we never engaged that high right there. So that's still your target, but this right here is just a place where you're going to either take something off because we're still waiting to see if this sale program is going to materialize, and that's going to act as a protected high. So you want to take something off there. You want to pay yourself there, but we're still in a buy program. So we're anticipating price to want to keep going higher because the higher time frame has not invalidated yet. All right. So very good. Very good. Okay. And the reason why I say partial credit is because um we're this is your true target that hasn't changed. This right here is just low hanging fruit, and you're paying yourself because you're not trying to force what you want, because it's showing you bearish signatures, right? It's starting to show you bearish signatures, and we never know when the top is going to be in. Only thing we can do is just take our chunks of flesh, you know what I'm saying, and be happy with what we can get. All right. So we traded back up into the low hanging fruit, right? After that, right there. Now, if we had traded back up here, taken out that high, and then come back down and rejected that right there, then we would have been looking at that high as our true reasonable target, because there would have been nothing else that we could possibly draw to. But since we came here, right, and left that liquidity right there, right? What is this? What is this right here signatures of, right? When we come into this discount, create short-term buy side in the market, come to that discount right there, right? What is that? What is that evidence of? Come on, smart money manuscript. Them people that was on the call, y'all should be coming through with answers now, because the questions we was having, the only question we had was way down here in this deep advanced stuff. So that means everybody that went through all that content and they got a good understanding of everything except for these deep ICT concepts, because the first and only question we had pertaining to the smart money manuscript was about the ICT concepts. So y'all should be pulling up with some hard hitting answers right now. What is it? What is it? What is it? What is that a signature of? What is that a sign of? What is that evidence of? All right. Well, y'all would have said we came down to a discount. We said short-term buy side in the marketplace, dropped down into a discount, took out some sell side. What is that evidence of? Oh, now y'all can't hear me. Oh, now y'all can't hear me.
Is that the institutional, I know it's institutional sponsorship, right?
Yes. Institutional sponsorship. Evidence, how to identify institutional sponsorship for long setups, right? Intermediate term imbalance in price, a move to discount or sell side liquidity run. Short-term buy liquidity, buy side liquidity is left in the market above price for pairing long exits to willing sellers. Higher time frame displacement, reversals, expansions, or return to fair value. And then stuff like time of day influence. We're on a daily chart. So we're just, you ain't gonna have the time of day influence, right? So what is that here? On this here, we move to a discount, right? We have a sell side liquidity run, right? We come here and we make this swing high right there. So what's above there? Buy stops. What are we doing? Right? Buy side liquidity left in the marketplace above price for pairing to willing sellers, right? And then we drop back down here, right? Again, move to a discount, a liquidity run. Once we get this liquidity run here, what do? We go back and engage that short-term buy side that was left in the market, right? Right. So when we're going up here, right? This liquidity there, right? We hitting buy stops there. People are willingly, right, selling at this point right here, right? Because somebody's buying right there, right? And somebody is selling right there, right? So when it starts selling, the market starts to come back down a little bit, right? And then we rally back up there, right? Why? Because we started here, started the sponsorship here, came down, right? Went up, came down, went back up, right? Now, what's happening inside this big W shape that I just did, right? What's happening inside there? We got us a very large market maker buy model, right? And inside that very large market maker buy model, right, we started from over here with a market maker sell model, right? And then as we started here, right, we went up here, right? For this time frame, we did not complete a market maker buy model, but on a lower time frame, a market maker buy model was complete, right? On this time frame here, a market maker sell model was complete, right? And then on this time frame here, we completed this larger market maker buy model and a smaller market maker buy model right there, right? And this happened over a vast amount of time, right? But looking at what the algorithm did, it came down, rejected a low, and then traded back into that high, right? Traded back into that high. And how can you look at this right here, right? From this, from the 25th of August, right? Right? All of that right there, right? All of that right there is a type of time distortion, if you will. But Tim, why do you say that? Because, because when we expanded down, took out the sell side there and pushed back up, right, we kind of went into a holding pattern, right? Even though we went into a holding pattern and we pushed up and came down here, right? Only thing we really did was trade inside of this civvy right here and trade inside that order block right there, right? So if we look at all of this little move in between there, matter of fact, just those 3 days right there, right? Time distortion right there. Monday, Tuesday, and Wednesday, right? That Monday, Tuesday, and Wednesday, that's time distortion there because we come here, right? Go back and block this back out, right? If we come here, algorithm came down, pushed back up to the inversion fair value gap, came down, took out that sell side, and then rallied back up, right? So we just went like that. Okay. Started breaking down, right? Came to a discount of this bullish dealing range, right? Right. Came up, came back down to the discount of this bullish dealing range, rallied back up, stopped, came down, swept out internal liquidity inside our bullish dealing range, and then rallied up. Okay. That's all we did up here in this area, but we did it over a vast amount of time. Right. So even being held inside this little area right here of consolidation, you can see move to the discount, right? Anticipating to come back here, went back up. Premium PD arrays did their job, came back down, took out internal sell side, and then we rallied up into the buy side up there. Right. Well, Tim, why didn't it just rally back up into that buy side? Right. What do we need to pair up there? Somebody tell me, what do we need to pair up here? Right. When we go into that buy side, what do we need to pair up there? Right. Well, first of all, what's up here? What kind of stops are up there?
Buy stops.
So we got buy side liquidity, right? Resting up here, right? What do we need to pair with this? Do we need to pair the same thing or the opposite thing?
The opposite, sell orders.
We need to pair sell orders right here, right? So when we created this high and we dropped down here and we took out that swing low right there, where are more sell side orders resting? At this low right here or at this low right here?
That second low.
That second low right there, right?
Yeah.
And the reason why we know that more sell stops is resting right there is because what did we say from the beginning? This is when the elephant stepped in the pool. This is the true move right here, right? So this is when you know, right, the algorithm, aka IPTA, is doing something. So there's more stops resting there. Okay. So when we drop here, take out this sell side right there, and then wick off of it, right? And then we create these relative equal lows right here, right? And then we rally all the way up there. Now, everybody's looking at this whole area here as strong support. So guess what? All of the stops are now trailed up here, right? We're trailing the stops, right? So we're trailing our stops up. Okay. Now, right? And then we just got a clean little touch under there. So that means all of the stops have not been taken when we just dipped into that. You know, that means all the stops have not been taken, but right, still, all the stops are now moved from here up there because now this area is being looked at as strong support, right? So now, okay, we've created all these buy stops up here, and we come down and we gather sell stops from here, right? We gather sell stops from there. Boop, hit them, rally back up. Now, right, since we came down here and gathered these sell stops, what do we do here? We created a new liquidity pool of sell stops right there, right? Come in, we said we came down and we had created a new range. Right. Sorry. We said that we had created a new range. Okay. And then when we rallied all the way back up here, right? So we created a new pool and we rallied all the way back up there. Now, all of these stops that was here, right? Everybody was like, oh, that's strong support right there. So now they done moved all the sell stops up here. Okay. Or a great deal of them. Now that we've engineered sell side liquidity. Okay. Because at first when we was dropping here, right? We didn't have any sell side liquidity. All right. So we come down here, we trade into some sell side, right? And we engineer more sell side because this where the big pool of sell side was. We came into a little pool of sell side right there. So now we've engineered more sell side liquidity, right? Came to a premium area that should resist price, right? We trade back down, back into that liquidity pool again, right? And now we've accumulated all of these sell stops, or the algorithm has gotten enough sell stops, because we don't know how many sell stops that it really need. We don't know how many buy stops it really need. We don't know how many orders are really there. We don't know how many orders are really here. We just know that they're there, right? And then once IPTA gets enough sell orders, right, it starts to rally and come up here, right? And it offsets the sell orders with these buy orders right there. Comes up here. Now that we've collected enough sell orders, now the algorithm can go up into the buy side to pair them with those buy orders up there. All right. And that's all that, in its simplest form, that's all that the algorithm does every day, every single day. It engineers sell side liquidity to take it to buy side liquidity. It engineers buy side liquidity to take it to sell side liquidity. All right. That's all it does all day long. Market maker buy models, market maker sell models. Right. If it wants to go down, okay. If it wants to go down, it's going to engineer, right? It's going to engineer some liquidity. We engineered liquidity. It's going to go up to a certain point, go up to a certain point, and it's going to come back down and engage that liquidity. All right. If it wants to go up, it's going to engineer liquidity. It's going to come down to a certain point, then it's going to come back up to that liquidity. Right. Because it needs the opposite to complete the transaction. Right. It can't just go in and say, okay, I want to go up and just keep going up. No, it has to come down and get the rocket fuel first before it can go up. It can't just go down because say I want to go down. It has to go up and get the rocket fuel first. Tim, you say the same thing every live stream, and I'm gonna keep saying the same everything live stream because it don't change. Just because you get tired of hearing it don't mean that it is supposed to change. I'm gonna keep saying it until you realize this is what's important. This is what's important. It's not about what I want. It's not about Tim, just tell me what I want to hear. Just tell me what I want to hear. Come on, buddy. Tell me what I want to hear. Make me happy. Make me feel good about my trading. Tell me what I want to hear. Not gonna do it. Not gonna do it. All right. Yeah. Really ain't much to look at. I ain't gonna go like deep into the charts. I'm just adjusting my lows and highs for the week down to the 1 minute level. I like to put my candles on like the lowest time frame. I like to put my candles on the lowest time frame that's available so that it ain't sticking out into like weird hyperspace when I drop down in time, like how it is there.
Tim,
Yes.
when will you switch over? I know contracts expire on Friday.
Yeah, I switch like for some reason my Ninja Trader was like trying to switch my NQ like last week, and so I had to like flip back to the old one. But good question. You can use CME, you can use bar chart, anything that's going to show you the volume and open interest on the instrument that you're trading. Like if you come to barchart.com and just look at the instrument you're trading, like if you trade the NQ, right? If you trade the NQ, just come to like the NQ futures, right? And just come down here, scroll down, and you'll see a little spot that says all future prices. Click on all future prices, right? And then you'll see you'll see the don't look at the cash, but you'll see the September contract in QU25, and you'll see the December contract, you'll see the March, June, you'll see like all the contracts, right? So you look at the December and September contracts, and you come over here till you see volume and open interest, right? Right now, there's still more volume and open interest on the September contract than a December contract. When the volume on the December contract becomes more than the volume on the September contract, that's when you typically want to switch over to the December contract, because now more participants are using the December contract than the September contract. Now, if your platform doesn't switch it automatically for you, or if your platform just works off the continuous contract, you really ain't got to worry about that. But yeah, that's how you figure it out. And then CME, I don't really remember how to get it off of CME. Let me see, CME group. Let me see here. Markets. NQ. Go to NQ. All right. Let me see here. Go to NQ. Let me see. Let me see. All right, let's go to data maybe. Let's do a search. Let's see. Expiry. Option calendar. What is it? I don't know. Nah, that ain't what I want. Let me see. Yeah, I know you can get it off a CME group. Let me see if I can find it. Markets. All right. See. Membership fees. Uh-oh, went to the wrong thing. I thought NQ was over there a few minutes ago. Okay. Let me see. Nah, that ain't it. I don't know. I found it on here one time before, but I use bar chart all the time, so I don't really know. Let's see here. Markets data, browse license, real-time data registration equals license data, right from license market. Understand. Expiration calendar. Okay. Nah, that ain't what I don't know. I don't know. I know how to get it on bar chart. I found it on here one time before, but I can't remember where I saw it at. Up, wait a minute. Did I just see it? Okay, it's a NQ futures. volume, open interest. These are the numbers here, right? These are the numbers here. I don't know what thing this is, but I need to see it where it's got the things up there together, where the different months are together. I don't know what that was. Volume and open interest. I just saw it right there. So what was that under? Markets. Nope. Data. Was it data? Yes, it was data. Okay. All right. Now let's go to the top, see if we can find it. So CME group, data, volume and open interest. Okay. All right. Exchange futures, overall, futures, options, futures only. Options only. Okay. Does it give me the do it give me the option to find another? Okay. I got excited for a minute, but that didn't give me exactly what I want. All right, say exchange futures. Daily historical monthly volume report, open interest profile, view all. I don't know. Oh well, I'm getting tired of looking now. Oh, product market attitude. Oh well, just do it on bar chart because I can't find it on here. And y'all know this is gonna drive me crazy. Y'all know this is gonna drive me crazy. Okay. Go ask my buddy. How to find the volume and open interest. Uh-oh. To find the volume open on the NQ research site, you can find a few different ways. All right. Here's a breakdown of how you can find a daily volume open interest, product specific page. The easiest way to find the specific to the CME website, search for the NQ, use the search bar, website, enemy future, navigate to volume and open interest. Once the page, look for the tab. Saying, okay. All right, so CME group, NQ. The volume and open interest. Man, look how easy that was. All I had to do was go ask Gemini the first time. There you go, right here. Right. So we got the volume there, and the open interest there. All right. So hey. Oh no, I was on this page for everything. That's what it was. I was like, I remember this page, but I was on this page, but it was for everything. So, all right. Bar chart, you go in, put it in queue, go down to all prices, and then let me see, go back. So if you do it on bar chart, you go there, type in NQ, right? Go down to all prices, all future prices, and then boom, there's your September and December, right? Got your volume and open interest. When your volume gets higher on December, it's time to switch. On CME group, go to CME group, hit the little search thing in Q, right? NASDAQ future contract specs, volume and open interest tab. There's your September and October contract, right? Total volume, right? Open interest at close. Okay. Right? And you can see what is changing. Like at the close, 8,000 contracts got closed on September, and 23,000 contracts got opened on the December. So we're moving to that shift. We're shifting to it. So that's how you find it on the two sites that I know of. The one I use is bar chart, as you can tell, but that's how you find it on both of them. Thank you, Gemini. My buddy Gemini be coming through in the clutch for me. I ask Gemini everything. Tomorrow is Monday. We got tape reading. Like I say, looking at our higher time frames, right? We've engaged buy side liquidity. All right, we've engaged buy side liquidity. I said we was gonna look at this when we drop down into the lower time frames, right? So we'll go down into like a 60-minute time frame, and we'll squanch everything up. Remember, when I was saying we had completed a very big market maker buy model right here, and inside that market maker buy model, we was talking about how we had that sell model there, right? We had smaller market maker buy models inside of there, right? But that big market maker buy model, this market maker sell model, right? All of that right there was a part of this one big market maker buy model there. And then we said over here, this last week was a low resistance liquidity run into the buy side liquidity, right? This over here, right? That's our original silver bullet right here. This move right there. That's our original silver bullet, where we come to a discount, we come to an OTE, right? We even looked at that, right? Remember last week when we looked at our deep OTE retracement, we said we asked the question, we said, when do you look for an OTE entry? And we said is when we coming off of that area of accumulation or distribution, right? And that's when we run our Fibonacci's from body to body, right? And get our OTE settings, right? We came down, got us a deep OTE retracement there at the 79%, right? And if you went all the way from this one here at this area of accumulation there, doing your OTE off of there, you would have gotten at least a 62. The 70.5 and the 79, you wouldn't have got picked up, right? You would have had a larger risk than doing it from here and getting picked up on the deep retracement of the 79, right? Or maybe even the 62 from here, right? Either way, it would have been a little bit smaller of a risk than here because it's a larger span, right? Range, right? But either way it go, either one of them would have been a successful OTE going all the way back to the target over there, right? Because That's our low hanging fruit there. And that was the overall target based off of what price had been doing on the higher time frame. Now, as we see here, right, price came down, took out sell side, traded back up, took out buy side. That's our wig snatcher, right? Traded back down into a discount, into the bullish order block, right? Into the OTE, into the bullish breaker, into the high probability inversion fair value gap, into a lot of confluence right here. And then it was a slow roll up. Now, coming over here, we did sweep out short-term sell side liquidity there, right? Swap out some short-term sell side liquidity there, some short-term sell side liquidity there, but we never took out any significant lows as we were going up into this buy side liquidity, right? We were accumulating some short-term sell side. We were manipulating some short-term sell side liquidity and making our way up all through the week, but we never had any significant retracements once we came down into this discount and got up to that upper quadrant of the range, right? I think this was our range from last week. Can't remember. Was this the range? I think that was our range from last week. Right there. Once we made it to that upper quadrant there, right? Traded down to the discount, right? We never, right? This high right there was inside that upper quadrant. That high right there was above it. Once we traded above that high right there, right? We never came back down deep, right? Came down. And matter of fact, once we made it to that upper quadrant, it was acting as support. But like I say, once we took out that high there, right, we set relative equal highs again, dropped down to that upper quadrant and never came deep back down into it, right? And then continued to move up, right? It wasn't super pretty on the intraday time frame, but looking at it in the grand scheme of things, right, it was a nice low resistance move in the grand scheme of things, because in the grand scheme of things there was no deep retracements, right? It was a constant move up. All right, man, that's all I got. Hopefully y'all got something out of this. All right, looking at our daily time frame, we're treetop tall. There's nothing to really like look for. Based off our extensions that we did, we came up here to a 1.5 fib extension, right? Based off extensions that we did last week. I think it was, let's see here. This was our low there. That was our high, right? Remember, we picking it out because we got our, he's happy because he's an important low, right? He's happy because he's an important low. And then we run our projections up, bullish projections up. We came up to a 1.5 standard deviation, right? Got a 1.5 standard deviation. And on this time frame, we've come down, got a break in market structure on this 5-minute time frame, right? Got a bearish break in market structure on this 5-minute time frame. Right, on a 15-minute time frame, got a bearish break in market structure on the 15-minute time frame, right? Nice rejection there. So, right, this is created to keep us down, right? Nice rejection. Reasonable target would be the high that sent you there, right? This is designed to keep us down. We traded up into it, rejected off of it. Now we're looking to see if you will want to look to see if that right there is going to be enough, or right, if we're going to get us a wig snatcher going the direction we want to go, come back, manipulate out a higher time frame high, and then come down, right? Because we've got a bearish break in market structure. So you're looking to see if this bearishness wants to ensue because we got a bearish breaking market structure at an anticipatory reactionary point. Okay. Now we went to a 1.5. That's a time to get a retracement. Why? It's at a 0.5. Those 0.5s, we tend to get a consolidation or a retracement, right? In this case right here, we got a consolidation and a retracement, right? Back into the PD array, right? Then we got up here to the 1, moved up to the 1.5, got a retracement all the way back down to this 0.5 and took out the low, right? So we had a full 1 standard deviation retracement, right? But Tim, what do you mean? Because we went from a 1.5 to a 0.5. That's a full measured move, right? Because that's a half and a whole. So we had got to the 1.5, had a full standard deviation retracement, and got a bearish breaking market structure on the 15-minute time frame. Rejected off of it, moved back up into the SIBI, right? Respected the SIBI, dropped down, and now we're just kind of hovering there, right? Just kind of hovering there. Okay. 15-minute time frame, looking to see if that you're inside of a bearish trend, bearish dealing range there. So on the 15-minute, right, you're inside of, you're in the discount of a bearish dealing range, right? On our daily time frame, we're up in the premium. On our weekly time frame, we're up in the premium, right? So this right here is the low of the previous day. That's the high of the previous day. On the right. So on the daily time frame, you're up here in a premium, right? For the overall daily time frame, you're up here in a premium, right? 15-minute time frame, right? We're in the discount of a bearish dealing range that was established, right? Breaking market structure there, bearish dealing range. 60-minute time frame, right? You're still in the premium of a bullish dealing range and just engineering liquidity, right? Blast off there. Got a small BISI right there at equilibrium, right? Once we made all-time new highs, we've just been up here engineering liquidity. So from the 15-minute, the 60-minute, daily, weekly, all of that still in the buy program, right? 15-minute has switched to a sell program. So, right, the extreme low intraday time frames, right, are showing some details of bearish price action, but we still don't have any anything like that on anything of a that would be deemed a higher time frame, right? On your 4-hour, you've closed with the ability to make a BISI, right? But we've got a strong rejection after taking out the high. So on a 4-hour time frame, right, you will be watching this. This BISI is in the premium to equilibrium. So for the 4-hour time frame, you will watch to see if we lay a 4-hour candle across this and create an inversion fair value gap on the 4-hour time frame. Right? Doesn't have to happen in the next candle. You're just watching this on a 4-hour time frame, no matter if it's 1, 2, 3, 4, 5 candles, however many candles it is, you're watching that to see if it becomes an inversion. Now, if it continues up and creates more inversion fair value gaps, that's a different story. But for right now, with what the algorithm is showing you, right, this is the first BISI that was created when we came up into this buy side, right? So for right now, if this remains the only BISI that's here above this old buy side over here, then you're watching to see if this becomes an inversion fair value gap on the 4-hour time frame, right? The 60-minute time frame, same thing. There's a BISI there, right? Watching to see if that becomes an inversion fair value gap. 15-minute time frame, we've already, had a bearish breaking market structure, right? Only like we created an inversion fair value gap though, which we did. Yeah. What's that close? 03. Open. 03. Okay. Right. So still respecting that BISI right there. Still respecting that BISI. But on the 15-minute, right, we've got a bearish breaking market structure. Right. So watching this to see if it becomes an inversion fair value gap there. Yeah, that's it. Right. Got a change in state delivery there on a 15-minute time frame. Watching this immediate rebalance, right? You see this immediate rebalance there. You can still watch that right there because that immediate rebalance took away the ability to make a BISI. But if we didn't get that immediate rebalance, that right there would have traded up into a BISI, up into a SIBI, right? So that balanced price range right there. But Tim, why you say that's a balanced price range? Because look at the delivery. We had buy side delivery here in this candle, right? We had both ways in that candle right there. We had sell side, that offsets that, and that went both ways, right? So that right there, the balanced price range, right there, that immediate rebalance overlapping that, you can still look at that right there as, okay, that's your BISI, that's your SIBI, and that's your balanced price range. We trade back up into it, drop off of it, right? So right now in the 15-minute, we got a bearish dealing range, but what are we in between the tail of two cities, right? We had a bullish fair value gap at a bearish fair value gap at a balanced price range. So we're in between those right there. All right. Tired of running my mouth, and plus I got to go take my son to the movies. If y'all ain't getting nothing out of this, sorry. I'll try it again next time. If you what's this? I see something in the chat. Who over there typing in the chat when you all know I don't be looking at the chat? Oh, okay. You're welcome. All they said was thanks. You're welcome. All right, and that's it, man. Got tape reading in the morning for the mentees through YouTube and for the diamond members through Discord, and then price action recap tomorrow night at 6. All right, y'all enjoy the rest of y'all Sunday. Yeah, that's it. Y'all enjoy the rest of y'all Sunday. I'll see you on the next one.